Welcome to the video portion of TaxAid and Cash Oregon's online class on Oregon taxes. This is the second module of 4 on additions, subtractions, credits, and exemptions. In the previous module, we talked about the relationship and the differences between Oregon taxes and federal taxes, and how the ASCE worksheet will help you capture these differences. We also talked about how some items flow automatically with the TaxSlayer software, and how some require a little bit of additional work. In this module, we'll discuss these line by line, and which is which. Recall that fundamentally, the Oregon tax code follows the federal tax code, or at least depends heavily on it. And most of the information on the Oregon return will come from the federal return. So, to complete an Oregon return successfully, first make sure the federal return is complete. This way, we'll have the federal AGI to use as the starting point, and will allow the software to bring in as much information as it can automatically. While that's happening behind the scenes, we'll focus on the key differences between Oregon tax and federal tax by using the ASCE worksheet. I will be referring to the ASCE worksheet throughout this module, so you might want to have a hard copy or have it open on another screen. We'll use the information from the worksheet and from the taxpayer to take the federal AGI and make the necessary additions and subtractions to arrive at the Oregon taxable income. After that, we'll apply the Oregon credits. Some of these mirror federal credits, or even depend on the information from the federal forms, but some are completely unrelated. So we'll go through these in detail. As we mentioned in the previous module, there are 3 main categories of differences between Oregon and federal taxes, at least in terms of effort. The first is what we might call direct transfer. The software does it for you, and just moves the information from the federal return or any applicable schedules to the Oregon return. The second category is where some work is required. This might be where the information doesn't exist on the federal return or needs to be input separately. For example, an Oregon refund is not taxable on the Oregon return. The amount of the refund is on the 1040 and it could be transferred, but there's no indication on the federal return of what state the refund came from. So we have to put that in manually. The last category are cases that we might call significant effort. This is where we have to go outside the software, perhaps on eugeneta.org, and use the calculators or schedules there to get accurate information. We'll go through the most common of these in this module and during the training, but also take a look at the right side of the ASCE worksheet. Not only will you see a brief explanation, but there will be some pointers on how to get the more difficult things into the system. Here are some examples of items that get transferred directly. As you might expect, basic info such as name and address is transferred to the Oregon return automatically. If the taxpayer qualifies for earned income credit at the federal level, a portion of this is transferred automatically to the credits on the Oregon section. You'll recall from the training on the federal return that in some instances Social Security benefits are taxable. On the Oregon return, they won't be, but the system will automatically subtract this from taxable income. Also, just as you can deduct the amount of tax you pay to the state on your federal return, you can subtract a portion of your federal tax liability, but the system will do that for you too. Earned income credit, Social Security benefits, and of course, federal tax liability are very common, but that's great. They're handled automatically. Next, we'll talk about some examples of where some minor intervention is needed. Additional information put on the state return to complete it. For topics like your Oregon income tax refund, interest and dividend on government bonds of other states, Or if the taxpayer has a child or an adult with a qualifying disability, there's not quite enough information on the federal return. So let's go into more detail. Up to the entire amount of state tax refunds are taxable at the federal level, but Oregon doesn't tax Oregon refunds. So from the federal AGI, we'll subtract the amount of the Oregon refund to get at the Oregon taxable income. You might be thinking, wait, but I put the amount of the refund on the federal return, why doesn't it transfer automatically? The answer is, it's possible to have refunds from multiple states, and there's not a distinction made at the federal return level, so it has to be done manually in this case. Interest and dividends on bonds from the federal government are taxed on your federal return, but anything from state and local governments are not. But any jurisdiction other than Oregon is taxed on the Oregon return. In the 2018 version of TaxSlayer, there is an opportunity on the federal return to indicate tax-exempt status at the state level. Pay attention in class to see what manual entry might be required to complete the return. For the child with disability exemption, the information on the child will flow through from the federal return automatically with the other dependents. But since the information about the disability itself won't be on the federal return, there's nothing to transfer. If the taxpayer indicates that they may have a child with a qualifying disability, you'll consult the Oregon Pub 17 to ensure those criteria are met, and then just simply check the disabled box in the basic info section. Similarly, if the taxpayer themselves or their spouse qualifies with a disability, they'll get an extra exemption as well. This is done in the same way. Just check the disabled box in the Oregon Basic Info section by disabled. In these examples, even though some work is required to complete the return, it really is pretty minor. A credit of up to $50 per taxpayer can be taken for qualifying political contributions. To qualify, the political activity must affect Oregon. So this could be a local election, a national election, a state election, a ballot measure, a donation to a political activity committee, or PAC, that's based out of Oregon, and sometimes even union dues. Make sure and ask the taxpayer probing questions about whether something they've contributed might qualify. This is something that's already misunderstood. Oftentimes it's made worse if the taxpayer has a receipt that says explicitly cannot be used for tax deduction. But this is because a political contribution can't be taken as an itemized deduction at the federal level. So that's done for clarity, but it kind of confuses things for the state return. And keep in mind, since this is a credit, it reduces the amount of tax that they owe by the amount of the contribution. Effectively, they're paying themselves back up to $50 just for being politically active. Another example of a taxpayer being able to effectively pay themselves back is on the Oregon Cultural Trust contribution. If the taxpayers made a donation to a qualified Oregon nonprofit and a donation to the Cultural Trust, they can take a credit for the portion of the donation they made to the Cultural Trust of up to 100%. This is much less common than the political contribution credit, but since it's dollar for dollar, it's certainly worth asking. Next, we'll talk about some examples of items that require more significant effort. If the taxpayer has a federal pension income, they may qualify for the federal pension income subtraction. And if they have medical expenses, they may qualify for the special Oregon medical subtraction even if they don't itemize their medical expenses on the federal level. If the taxpayers made payments for dependent care and they meet other criteria, they may qualify for the Working Family Household and Dependent Care Credit. As you remember from the federal training, anything to do with education credit tends to have significant effort. The IRS doesn't allow scholarships to be used for housing expenses, at least not and have it be tax deductible. but Oregon does, so we want to make sure and subtract those. And as of this recording, the tuition and fees deduction is expired. But if it's renewed, the state may allow the taxpayer to take a tuition and fees deduction even if an educational credit is taken at the federal return. We'll go into more detail about each of these. If the taxpayer meets age and income requirements, he or she can subtract more medical expenses than at the federal level. Now, that might sound straightforward, but unfortunately, there are other complicating factors. For instance, if the taxpayer's already deducted medical expenses on their federal Schedule A, we can't subtract it a second time. That's part of why this qualifies as significant effort. To do the special Oregon medical subtraction successfully, you'll need to use the information you pick up during the interview process, and you'll need to make sure that the federal return is completed to be able to use the information from the federal Schedule A. There may be some tools built into TaxSlayer, but we'll recommend that you look at the worksheet on eugeneta.org to calculate the benefit, and we'll go into detail on that process in the next module. If the taxpayer or the taxpayer's surviving spouse collects a federal pension income, you may be able to exclude some of the income and take your subtraction. Retirees pay no Oregon tax on federal pensions earned on work performed prior to October of 1991. That's a pretty specific date, but that's okay. Oftentimes, this information is available on the previous year's taxes. Because think of it this way. If a retiree worked before 1991, then they did the same amount of work before 1991 last year as this year. But if the prior year taxes is unavailable, you may have to get some dates from the taxpayer about their tenure in the federal employment. This is another place where the worksheet developed and posted on eugeneta.org greatly simplifies the calculations. And we'll talk about this in the next module as well. The WFHDC credit. It's a lucrative credit that helps low to moderate income families pay for dependent care while they're working. Note that this is a refundable credit, and remember from the federal training that refundable credit is money that they can get back even if they don't have a tax liability. The information on the WFHDC credit automatically flows from Federal Form 2441 on dependent care. So it's really important to complete Form 2441 even if you don't expect to get federal benefit from it. This is one place where the software does it for you, but you have to give it a little help. You will need to manually select refundable credit in the Oregon section of taxpayer, and it's really important that you ensure that they qualify. Since it's a refundable credit, it's a higher risk for audit. If scholarship income was used for housing expenses, and these expenses weren't able to be deducted on the federal return as part of an educational credit scheme, then the taxpayer may be able to deduct them on their state return. Some things to note here. The scholarship has to be claimed as income in order for there to be something to subtract. Also, like I said, the expenses can't already be deducted elsewhere on the federal return because we can't deduct the same money twice. But the good news is, once that determination's been made, it's straightforward. You simply select it in the subtractions menu of the Oregon section of TaxSlayer. In previous years, both the federal and the state tax code allowed for a tuition and fees deduction. And if the deduction is taken at the federal level, it will flow automatically to the state. However, it's much more common to take an educational credit, in which case the tuition and fees can't be taken as well. But on the state side, there is no education credit. So if an educational credit is elected on the federal return, the taxpayer can still take the tuition and fees deduction on the state return, but it has to be done manually. And one important note, as of 2017, the Oregon benefit is tied to the federal tax law, and as of this recording, the federal tax law is set to sunset the tuition and fees deduction at the end of the tax year. If it's not extended, or if the state doesn't create their own law around it, it may go away entirely. Just be sure and find out during class. Some further resources. I've mentioned the Eugene TA website, that's eugeneta.org, for the worksheets and calculators that we'll use in the next module. This is also just a great place for information. The 2018 Oregon Pub 17 is not yet available online, at least at the time of this recording. But check back on the Department of Revenue site. It should be up sometime in January. We don't expect hard copies to be available this year, but you should have bookmarks or URL at your site. The Pub 17 will have detailed descriptions, as well as the codes for all of the additions and subtractions. These are the same codes that will appear on the Schedule OR-ASC that's automatically generated with the state return. These should be checked during the QR process, but if you have any questions about what you've done on the state return, cross-referencing the codes on the Schedule OR-ASC against the codes in the Pub 17 is a good idea. These are the same codes that appear on the Oregon ASCE worksheet that you'll fill it out at the interview and intake section, just to make sure that everything is going smoothly. Also, you can always ask the people around you for help. Your site coordinator, your quality reviewers, and just your fellow volunteers should have a lot of information that will help you. Let's recap. In this module, we talked a little bit more about the relationship between the Oregon tax code and the federal tax code. We talked about the ASCE worksheet and how important that'll be to use during the intake process to help you fill out the state return. We talked about when to focus on the differences between federal and Oregon tax code, and we went into some of those key differences in detail. And we briefly went over resources available for more information. Thanks for watching, and thank you so much for volunteering.